Good afternoon, ladies and gentlemen. Welcome to the SCOTGOLD Resources Limited investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions at any time and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, all questions submitted today will be reviewed, with responses published on the Investor Meet Company platform where it is appropriate to do so. Before we begin, I would like to submit the following poll, and if you could give that your kind attention, I'm sure the company would be most grateful. I'd now like to hand you over to CEO Phil Day. Good afternoon, sir.
Yeah, good afternoon, everyone. Thank you very much for attending again, third webinar for this year. It gives me great pleasure to continue on with the same presentations we've done previously. So I'm going to step forward, give an update as to what we've been doing, some of the highlights, some of the lowlights, and hopefully by the end of it, get some good feedbacks and questions so that we can answer questions to our investors. So without any further ado, let's step straight forward into the presentation. So same strategy as we had began at the beginning of the year is to optimize the value of our CONONISH vein, which is the vein that we are mining currently, and then grow the resource through either expansions or regional explorations. And we do this through our people investment commitment to sustainability. And the whole point of all of this is to deliver long-term sustainable growth returns for all of our stakeholders. So this has not changed. This underpins everything that we do. How do we make gold? Just a short slide on how we do it, for just as a reminder. So we obviously have a hard rock mine, underground mine, where we drill and blast, and then muck and truck out to the ROM, and then process on site through a non-cyanide flotation process. And we use dry stack tailings to make sure that we are as environmentally friendly as we possibly can be. Right, just to start off right at the very beginning, because this is a slide that I had presented in the very first of these presentations at the beginning of the year as a prediction of our gold and our ramp up through 2022. It may help, or I hope it will help explain what's happened in Q3. But obviously, as it shows here in Q2, we well exceeded our target, as probably everyone knows. And then we've gone out with an RNS through Q3 and revised that target. There are some specific reasons for it. It doesn't have any impact on the long-term projection outcomes of the company itself or the vein. It was a very small issue that happened because of the way that we're implementing projects all on top of each other through Q3. Right, so what have we been doing in Q3 and Q2 and leading into Q4 in the mine? I'll split out the mine and the process plant. Probably be better from now on to do that. It might just make things easy to explain. So in Q2, we specifically spent a lot of time working on the fleet, the mobile equipment that we have underground, and our systems and our procedures and our critical spares and the like, to make sure that that was operating and getting up to the availability that's required. That enabled us to operate at a certain tonnage rate. Then we went into Q3 with the knowledge that we had to upgrade our power, we had to upgrade our ventilation, we had to do it in multiple areas. We successfully did that, albeit 3 weeks late. So I'll talk to you about the impact of what happens when you don't miss it, or when you miss a target by 3 weeks. But it is running now, and it is helping us substantially, and it is enabling us to get up to what's called the 415 level now, to actually get and head towards our area that we're going to do proper long hole stope drilling by the end of December. But at the same time, we finished off the footwall drive down the very west end of the mine itself. And next week, we're actually going to be commencing our resolution drilling to make sure we understand exactly where our stopes are going to be placed in that area once we've completed the stopes on top of the waste ramp area. So that's all the busy work we've been doing in the mine, heading towards phase 2 by Q1 next year. On the process plant, in parallel, we've been just doing a whole lot of debottlenecking work through Q2 and into Q3, be it in flotation and in tails filtration and in the mill area and in the crusher area. That has had quite a lot of successes, enabling us to get into the order of between 4,000 to 4,500 tonnes per month, which obviously just helps us reach towards our 6,000 in an easier manner if we so wish. And the tails thickener itself is coming along. It is planned to be online in November. When that is online, in combination with all the debottlenecking work, we expect that and fully expect that to get to the 5,000 area when we turn it on and commission it, and then give us some time to do some more debottleneck work with the tails thickener in. And we at the moment fully expect that we're going to be able to hit 6,000 tonnes per month. Now, this goes in the light of what we've been presenting previously. We've been presenting previously that we'll put in an ore sorter, but I wanted to bring to the table that we've actually figured out a way to be able to increase our throughput of our process plant without actually installing a ore sorter. So therefore, we may actually do one or the other. It all depends on what is going to be the easiest methodology for us to implement, what's going to become the easiest, and what is also going to be the most cost effective. But the fact that we can do both just enables us to have more conservatism in our plans and more backup plans. Right, more specifically in the mine, going back onto those projects that we talked about up front, what we did for the mine and power upgrade and the ventilation is we ended up by installing more generators and transformers and ventilation fans, both in the waste ramp and also down the main, what would you call the main part of the vein itself. And what this enables us to do is actually get more electrical power to our drill rigs where it's required, more power to our vent fans, put in larger capacity vent fans, which enables us to blow more air down, makes it so that we can actually ventilate more, which in the end enables us to use more equipment in parallel. So we can use scoops and trucks and our jumbos all in parallel rather than having to sometimes limit them based on some of the ventilations and all the power restrictions that we had before. So it has significantly upgraded the rate at which we can mine at any given time. From a pictorial point of view, I'll try to explain that through this particular drawing and the next slide. So, because I presented this last time, what this does show is the mine itself from the porthole, which I'm going to draw here for everyone to be able to see. Porthole is on this side right here. So that's where we enter into the mine and we actually go in a westerly direction through this area here called CAF 1, which is what we mined back in 2021. Okay, we go along here. This is called the 400 level. We continue along west into what's called the 400 footwall drive, and this is the very west end of the actual mine itself. Through Q3, we were up here on what's called the 415 drive level, and we actually mined this CAF 2. So what we did through Q3 is we set it up so that we mined this. We had this here available for us to be able to step up into this area. And as we have what's called a waste ramp here, that takes us from the 400 to 415. And we've just now started to hit this area here because of the increase in ventilation. But at the same time, we've been able to set up this area here with all the drill rigs to enable us to fan drill out here in this area and understand exactly what's happening, ready for stoping here. But we are going to commence, and I'll put it on the next drawing, stoping in this area right here. So we will then have phase 1 here, phase 2 here, phase 3 over here on the 430 ramp, and at the same time drilling all over here. And as I've spoken about in a couple of other presentations, once you start getting multiple faces in your mine is when the productivity of your mine increases substantially. Next slide hopefully might explain this in a better and a more easier way. I'll start from the other side now that we've described the west end and the east end. I'll do it again. This 400 footwall drive here now is called the west end of the mine, where we have all these cubbies and like and drilling program, which is called ResDed drilling, starting next week to allow us to understand all here specifically of where we're going to place stopes. But in parallel, we have gone here up the waste ramp to what's called the 415 level. We now have an area here called 415 East. And we have another area here called 415 West. And we're going to head in this direction. If I can draw an arrow. Up the top of this CAF 1 area. And rather than do what's called a CAF, which is a cut and fill stope, we are now going to do proper long hole stoping, which was the original intent of the mine in the very beginning. And once you get to long hole stoping, the amount of tons of material that we're going to be able to have through this stope and preparing for these stopes over here enables the mine to be a self-continuous tonnage mine and actually enable us to get to 6,000 tons per month. Right, in parallel, as we discussed on the process plants, once the mine is actually up to speed at the 6,000 tons per month, the process plant also has to have the ability to process that. So, as I have now discussed in this presentation, separate to what we've discussed before, the crusher area here is almost set up. There are some wear rates on crusher plates, and particularly the secondaries, that we have to address. But outside of that, it is almost at the 6,000 ton rate. The ball mill itself is getting there as well. It needs a little bit more upgrades on feed chutes and spillages, but we've done some enhancements this month, which we're going to start testing through October to determine if we need to do any further. Flotation has been a big success this time. We've done all sorts of upgrades in the agitators and the way that the material is actually suspended, which has enabled us to get far more throughput in that area. We did continuous improvements in this tails press as well, which also enabled us to get higher throughput. But going forward, we know that we're potentially going to have to add more plates in here. We potentially might have to do some more pumping upgrades and whatnot as well in order to fully utilize the tails filter, my mistake. But once we actually get this tails thickener here in place, running in parallel with all of these activities, we will now have a far thicker material going to this. So we should be able to get higher tonnages per drop on the tails filter. We'll be able to unleash our flotation to operate faster as it has been. The mill upgrades, as we said, has been done before, as has the crusher. And so in our opinion, we've now set up the plant to be able to do 6,000 tons, which is phase 2, without the ore sorter, if we so wish, which is a great contingency plan, hopefully you would agree. So that again, that is all the material, all the steps we've been taking on flotation to increase the throughput. So it's now up to 33% higher than it was before through upgrading of rotors, stators, and agitator shafts. The tails thickener is here in these pictures, which you wouldn't have seen before. That one there and this one here will be fully commissioned in November. And once it is fully commissioned, we fully expect the process plant will be able to do 5,000 tons per month. And finally, the tails filter here in the background. Here's the final step in the piece. Once that tails thickener is in line, we should be able to add some more plates here, potentially upgrade some pumps, and we believe firmly that we'll be able to achieve 6,000 tons per month if we do so. Right, so in the process of doing all of the upgrades in the process plant and the mine, through Q3, we learned a valuable lesson, and that is when we are trying to do projects in concurrent with our operating work, the complexity of everything increases, obviously. And if you miss a target on a project, it can have a knock-on effect everywhere and anywhere. And in this particular case, it had quite a severe knock-on to accessibility to the waste ramp, which we've eventually got to. We've done it now, but because of that, it had an impact on September's production, and hence why we had to go out with the RNS to downgrade our expectations. But all of that gold is going to be taken out through October and in November. So we fully expect that Q4 will be potentially higher than we have anticipated. But a lot of these mitigations are like were put in place. It's just that probably the level of complexity went up above what we thought it probably would. And that's the lesson for us to carry forward, is to manage our complexities and put in more mitigations as we go forward to make sure we are far more successful and deliver projects on time as well as operate our mine. But the go forward, which is this slide presents, has not changed. It meant that by the end of phase 1, we achieved those run rates. By the end of Q3, we achieved the run rates that we wanted. And now we're heading towards the phase 2 run rate. Although it was just a lot lumpier than we had anticipated, but we got there in the end. In parallel to all of this work, we've also gone out and commenced some exploration work. In our slides previously in the webinar we had back in Q2 and Q1, we had talked about the actual CONONISH vein itself. In Q3, we made a decision to actually go and look at this particular area next to the CONONISH vein. So the CONONISH vein on this slide sits here. We firmly believe that there is a possible extension structure over here. So we are doing what's called VLF, so very low frequency magnetics work to determine what the structure is over here right now. And if that becomes true, so what that means is over here bear with me with my drawing. So that's the CONONISH vein there. This is the anomaly over here. If we do the intensity in and around this, and also compare that to what we know of the vein and whatnot over here, we're going to then program that data over winter, and that should give us a far better idea of the structure of the vein. And if that becomes true, then hopefully our success rate of drilling in the future years will be much higher. And if that's the case, we will get a very fast win by just increasing our known resources by just accessing a vein very, very close to the one that we already are, and therefore increasing our resource and increasing our reserve of our mine, and being able to process it through the same processing facility and access it through the same mine, or increasing our incremental ounces as we've spoken about all along. Right, that moves now into our final part of the presentation, which will be completed through ESG and into finances, which I'll hand over to Sean, the CFO of SCOTGOLD, to finish off.
Okay, thanks, Phil. So just working through, really one of the key things that we have is where we're located. We're in a national park, so we've got a very important duty of care for the environment, and obviously our permitting and what we can and can't do is slightly different to a lot of mining companies, but we embrace the principles of that sustainability in every area of our business. So to date, we've completed a ESIA, done a decommissioning and a restoration plan, and we believe we're best in class for our processes that support our sustainability. So what we have that a lot of other mines don't have is dry stack tailings, and we're one of the only global mining producers for gold that do not use cyanide, and that's obviously protecting our environment. So we're also looking to the future of what hydropower will do for us, because currently we are running off of diesel, so that's under review currently. So that again would strengthen that and then take us forward for next year and beyond. So that's underway. Really, our people, clearly in any company, not just mining, but certainly here, our people are the ones that make this happen. We've increased our headcount by 156% since we started, myself and Phil started in April 21. So we have 96 employees, 51 of those are Scottish, and we're continuing on to grow that team as we progress and as the mine grows, and obviously still looking to get that 51 Scottish employees up wherever possible. So we're dedicated to the safety of the workforce. We've been obviously we have a lot of H&S training programs in place, health and safety. And that will continue going forward and increase actually. So So we're quite excited about that and putting that in place. So, but what have we achieved in the community? So we've supported the work with Loch Lomond and Trossachs National Park. We contribute to the Strathallan Development Trust quite substantially, and we've provided a SCOTGOLD bursary in conjunction with St Andrews, University of St Andrews, which is again supporting teaching programs, again, and with an MSc in Strategic Earth Resources. So our plans going forward, work experience, we're looking at that, not just in universities, but in colleges and local areas. So we're looking around at that at the moment. Apprenticeship programs, which are vital. As I said before, local employment drive is key. And we target a lot of different volunteering efforts that directly in the local community, we get involved with that. And obviously looking to and engaging with local organisations. That's key in any mining community. So what's going to drive shareholder value 2022? We're coming to an end going into next year. Well, as you can see, the key one here is our increase in production. We're a high fixed cost mine. That's not stated on here, but essentially by getting our production up, we'll get our gold sales and in turn our revenue up. So on upward pricing for gold, that obviously is also good news for us as well. So and one of the things that's key as well, we get paid in US dollars. So at the moment, given the sterling where it's at, that's a plus for us as well. So that impacts our revenue as well. So that's key to note going forward. So really just what's driving shareholder value production. We're focused on our gold concentrate, as Phil mentioned before, targeted 17,500 ounces of gold run rate, moving towards that 23,500 magic number that we want next year. What we needed to do was get these projects completed, optimization. Some of them took a bit longer than we would have wanted, and we had some delays certainly in September, but we are seeing production ramp up, and we're certainly seeing that the plant is optimized and doing very well. And then with the thickener coming online, it's almost built, so that's looking very good as well. So optimization was the key to deliver then into growth. So growth will be our resource reserve expansion, and we've got significant potential to increase our resources, the reserves in our LOM, which we will be working on and is our focus. But obviously the key was getting our production up, moving into optimizing that. Now we can start that growth once we get stable. Exploration, obviously there's two parts. There's a regional, and then there's building up that multi-asset gold production company is what we're aiming to do, which is a longer term plan. Obviously the key for any business is cash generation, and so we're forecasting that to increase. We did very well in June, July, and coming into August or September. Obviously, we had a bit of a halt, but forecasting a very good last quarter, and then moving into next year. So we're still on track for going towards that average of 21.5 million profit EBITDA per annum. And we are still the only commercial gold mine in Scotland. So effectively, we're in a good position. We've taken where we are from a production, optimised it, looking to now grow and generate cash for our shareholders and for our initiatives that we want to do going forward. And so that's pretty much it in terms of the presentation.
Phil, sorry, Phil, Sean, if I may just jump back in there, and thank you very much indeed for your presentation this afternoon. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab that's situated on the right-hand corner of your screen. But just while the team take a few moments to review those questions that were submitted already, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Sean, Phil, as you can see, we did receive a number of pre-submitted questions ahead of today's event, as well as a number of questions that have been submitted throughout today's presentation itself. So firstly, thank you to all of those on the call for taking the time to submit their questions. And Sean, Phil, if I could just hand back to you to run through the Q&A tab and respond to those questions where it's appropriate to do so, and then I'll pick up from you at the end. Thank you.
Yeah, okay. Thanks for that. So basically, I'll take the first one. First question says, you are cash generative. You say you're cash generative and going to be highly cash generative in phase 2. when will this translate to profitability? So effectively, we determined what we term as commercial production, which is basically three profitable months in a row, and that we established that at the end of June. So as of 1st of July, we are what we term into profitable mining per quarter, and we've continued that into Q2, and we'll do into Q3. So essentially, that translates into profitability quarter on quarter. Obviously, it's mining, so when that becomes ultimately a profitable company, it's all about carry forward costs that we have to work through. But we will start to push a lot of profit through next year and beyond. So that quickly translates to overall profitability. So I hope that answers that one. Also, it says here, once you achieve 23,500 ounces run rate of gold in Q1 23, what would be the plan for CONONISH SG building a multi-asset company? Did you want to take that one, Phil?
Yeah, no problems at all. So obviously, there's multiple ways you can grow a company. We started out with a vision, and we are still obviously working our way through that. And that is to enable the CONONISH mine to pay for itself. So the name of the game is to get the production tons up. So we have used all the cash ultimately that we've been earning to reinvest in the mining and the process plant, as we've been explaining. And then obviously over time we've been able to release even more to be able to look at some of these very close areas which have got more detail in the exploration history. If we're able to do both of those, which we firmly believe we can, then by next year in 2023, I'm hoping to be drilling that out and adding some tons directly to the CONONISH vein, giving it the further life that would be wonderful to have, but at the same time making it the cash generative company that it is. And then from there, we can then just grow into whatever it is that we like. So we can start to go further afield, and so optionality from that point just grows exponentially.
Great. Got another one actually, good from you as well, Phil. How come you can produce gold without cyanide when other gold companies use it? What's the upside?
So we are able to do it for one reason only, is that the gold that exists in the mountain that we mine is very, very clean. So we make a concentrate that is enviable by many of our peers. It has got very low deleterious metals, so we're able to sell it or get a very high premium for it compared to others. And as a result, there's literally no incentive for us to have to downstream process it to make it into bullion and the like. We can sell it on the open market as a concentrate and get very good terms for that. But again, many companies in the world do not have that optionality because a lot of their concentrates will be full of arsenic, or it might be refractory, or whatever other deleterious metals. We're just sitting on a very, very, very nice resource that doesn't have those.
Great, thanks, Phil. Also got another one for you. Is it still planned, and you kind of answered it in the presentation, is it still planned to install the ore sorter? If so, what's the current program?
Yep, so we're still working through all of that. We're still doing a lot of the test works and engineering works and the like. I just thought it would be very worthwhile to show to our investment world that we believe we're able to do it either way. Then that way our confidence that we'll be able to achieve our target just goes up exponentially, because we're effectively saying I can do it in a less complex way, or I can do it in a more complex way, or I can implement it in my own time and take a little bit slower to do it to make sure it's done right. But so that's the name. So it may end up by being a choice, it may not, but we can achieve it either way now.
Right, thanks, Phil. I'll take the next one. It's basically, how actively is the company pursuing the much more exciting option, not a bit exciting, but of acquiring the finance drill to drill more mines rather than waiting for CONONISH to finance future expansion? That's a really good question. So we are actively looking at different ways to do it. What we do know is we're coming into the winter, so any drill program would be impossible to start this year, certainly given the snow will come. So certainly it's something in for next year. and we'll look at all different options on finance. In the meantime, we will be building a good cash base, so it will come down to just sit down with the board. Trigger point for us will be how well we do by Q1, just to see what we do going forward and how we finance that. But a very good question, and it really comes down to us delivering on what we say we're going to do, and then where we land and what options are available then, and it will be a discussion with the board. Okay, and I've got another one. Are we exposed, which I'll take as well, are we exposed to energy prices and sterling devaluation? We use a lot of power, but is it a large percentage of costs? So power is a good percentage of cost, but not the biggest driver. Gold price, and it also says here gold price is down in dollars but up in pounds. So the effect on that is that we do get paid in US dollars. So that actually helps us at the moment. Any upward gold price obviously helps us as well, because we don't have a correlating increase in our costs to the same degree that an upward price movement has. And certainly the US dollar against sterling is very helpful for us at the moment on our bottom line. But power is not the largest driver. I think the biggest one for us is from an operating point of view is going to be our staff costs. But we are, as I said before, we are looking at our power cost and power options for next year. We've got a study on at the moment, so to get on the grid, if that at some stage, that would be ideal.
That's right. That comes down to the next couple of questions about the hydro. So, yeah, I mean, we deliberately haven't put that into the presentations yet because we see it as a 2023 item, but it is on. We would love to do it, and it is very, very important for us to do. But yeah, we are pushing very hard to get the mine and the process plant up to that capacity that produces the revenue. And once we get there, then, like I said, in front of us then is, do we do more regional exploration? Do we do hydro? Which one comes first? Which one comes second? But it is definitely on our target to do.
Great. We've got another one that says within the headcount of 96, how many are based outside Scotland? So majority of our workforce are all in Scotland. If it's a case of how many did we bring in, it's less than half. But we do, given the lack of mining and specialised skills in the country, in the UK at the moment, we are having to get people from wherever. But we do have the majority of all of our people in Scotland. We have a couple that would be working half and half that come into Scotland, but essentially the majority are all, and we house them up here. Okay, and got one here. As a long-standing shareholder, when can we realistically expect dividend payments? I think that again is something for next year. It goes back to the exploration, the mix of once we start generating our phase 2 cash flow levels next year. At what point do we then look at? We've got debt to pay. We've got dividends that would be a discussion point, but we've also got growth, which is exploration, same as any mining company's decision. So the only thing I can say that is that we do have our directors are fully aware, and then in our board discussions it will come up. But I would say that's something for next year, but likely for the year after. I'm not saying that that's when we pay it, but I would say that next year board meetings would be discussions around that, about what the timing of that looks like and what our growth options are, and exploration is part of that as well. So it's all quite linked. So really depends on how good we can do between now and then. So I hope that one. So that's about it, really. Did you have? Okay, I've got one here which says, can you tell us about the status of Scottish Gold? SMO Scottish Gold noted on the final slide, Phil.
Yeah, no, that's just still a work in progress. Obviously, with everything else that we're doing, it is there, but very much getting the mine and the process plant and everything up to the phase 2 is our number one focus. And as I explained here, the downside of taking your eye or not putting in enough mitigations or thinking that your mitigation plans are right, but having much higher levels of complexity has hurt us. 3 weeks in our game really does hurt us, and so therefore it just tells me that whilst we're going through these periods of time, it's more hands on deck and complete focus to get to your target before you start venturing it further. So that is what we're trying to do, and making sure we do it as well as we can.
Thanks, Phil. I think that's all the questions that we have on here. Don't see any new ones coming up. So I think that's us. So thanks for listening.
Sean, Phil, if I may just jump back in there, and thank you very much indeed for addressing all of those questions that came in from investors this afternoon. And of course, if there are any further questions that are submitted today, we'll make these available to you immediately after the presentation has ended for you to review, and then add any additional responses where it's appropriate to do so. Phil, perhaps before redirecting those on the call to provide you with their feedback, which I know is particularly important to yourself and the company, if I could please just ask you for a few closing comments to wrap up with, that'd be great.
Yeah, no problems at all. Okay, so like I probably spoke about just now and a few times in the presentations, we have set out quite with a clear path this year to get the ramp up to phase 2 levels. We know that because it's such a high fixed cost business, once we get the revenue to a certain point, that enables the company to be quite cash generative, and then enable it to expand and grow into all sorts of areas and to reward our long-term investors, which is very, very important to us. In parallel, we've been taking the time to make sure that we are participating with all our other stakeholders to let them know where we're at, and we're going to be doing more of that as we go forward. But then reiterating at the end of the day, this particular month has been a big lesson for all of us. We've been taking pride in stating what we do and delivering on what we do. And in this particular case, there were some complex issues with electrical power that were turned out to be very complex, but we got through it. The long-term game was much more important to us to make sure we delivered on. So we got that in the end. But we all have a short-term impact. But we're going into a very, very exciting last quarter for the end of the year. And it gives me great pleasure to be able to sit here in front of all the investors and actually end the year with long hole stoping, which we've been talking about all year. It's an exciting challenge to get to, and when the mine gets to long hole stoping and can actually continually do long hole stoping, it's when mining capacity and throughput and productivity and costs go down. Everything goes the right direction, and then obviously more and more revenue comes out. So bear with us. Thank you very much for your support, and look forward to your more and more feedback as it comes.
Phil, that's great. And Sean as well, thank you once again for taking the time to update investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of SCOTGOLD Resources Limited, we would like to thank you for attending today's presentation. That now concludes today's session, so good afternoon to you all.